G'day everyone, welcome back to another episode of Spark Your Fire. Happy Friday, everyone. As always, we record our sessions on Fridays just to wrap up for the week. And you can always guarantee to see a happy John on the other side of the screen. That's for sure. How are you, John?
I was looking very serious, actually. Yeah, I'm very well, very well. Happy Friday to you too.
So I'll try to lighten it up a little bit, mate. I should have a beer on the camera too.
You should. You should. Very happy Friday indeed. Yeah.
Although you got to
Keep
have
it
a clear
early.
mind to talk about today's topic, that's for sure. So I'm
True.
not sure whether we want to have one. But anyway, we'll have one at one point in time, maybe when we talk about real estate, because that's definitely our right
Mm.
up at our alley. But look, a lot of things have changed, and things changed very, very quickly in the last couple of weeks. I'm sure everyone's aware that the US Israeli attack on Iran at the moment. That's causing a lot of turmoil in Middle East in terms of the current situation. We're recording this on the 6th of March as of this point in time. I think the attack was on the 28th of February, if I'm not mistaken. So literally about a week ago, roughly. Just in the last couple of days, things have changed a lot, and the whole world order, I should say, after a couple of weeks later, is going to be shifting quite significantly, in particular the Middle Eastern type of situations. Without going into the actual details, of course, everyone can read up. There's enough reporting online for everyone to read it up. I thought what's quite relevant today is, to have a chat with John in regards to, I guess, how should investors pivot in the current market from an asset selection type of perspective? So we're not talking specifically real estate in here, although we will touch on real estate in this case. But the most common assets that people or investors have mostly are gold and silver. That's one of the assets that most people would have owned. We will touch on Bitcoin as well, which is another one of those assets that a lot of people have owned or have owned in the last couple of years. And then we'll touch on real estate as well as a third type of asset, in terms of what you should be thinking, what you should be pivoting with the Iran war that's currently ongoing. And last but not least, share market, talking about index funds, or using index funds is something that we can consider. Should you be thinking about buying some index funds in the current market to be able to help yourself and safeguard your assets? Because what's going to happen in 4 weeks' time, nobody knows at the end of the day. Okay, so I thought, having the brain trust here, John, with us today, we will be able to have a bit of conversation, hopefully spark a bit of your thinking about, do I need to do some asset reallocation in terms of my portfolio? What makes sense? What potentially would make more sense, as opposed to, should you go aggressive at this point in time? So that's a long-winded intro, John. But
Yes.
yeah.
Hmm.
Shall we kick it off straight away to jump into our first asset in
Yeah,
this
let's
case,
do it.
which I
So,
think you definitely have some, I know, back in your shell. I don't know, is it under your bed at the moment?
no, not under the bed.
Gold,
But yes, the four assets you should own for 2026.
2026.
What's so? What did you say number one was? I think it was
Gold and
gold and
silver
silver.
is the
All right.
one. That's right. You sure you don't have some in your bed?
Don't ask, don't tell. Um, so, so yeah, so got. I mean, some of these are assets you should always own. I kind of feel that way about gold and silver, but gold and silver definitely have a very compelling cycle, and gold has been in a cycle really since about 2015, actually, but
Mm,
it's really accelerated. So, it kind of moves in 20-year chunks, and I still think it's in its cycle. But right now, 2026 gold is particularly compelling for all of the Trumpy reasons, right? There's
pumping
um,
reasons.
yeah, there's like tectonic plates moving in terms of uh, global supply chains, in terms of global energy with the war in Iran,
Yeah.
and also things like tariffs. So um, like power is being fought over, power is changing, and gold and silver are very political political assets. So I think you should always own gold. just zooming out really quickly, gold is like global money.
Yes.
It benefits when there is a coordinated and global depreciation in the money in all the currency in our wallets. So gold definitely is like there's some um, safe haven qualities, but there's also an inflationary aspect. And I think what we're going to see in the Middle East is probably some inflation coming out of it. I mean, inflation
Mm.
comes from central banks, but if the oil price is going up, that's going to feed into high prices. Gold loves higher prices and it loves volatility. Um, the other thing, and we mentioned silver as well. So silver is like a really useful commodity. I think it's the second most useful asset after oil itself, and we can come to oil. But silver is every time a bomb gets dropped, a little bit of silver gets obliterated. That's never going to be found again. So silver's highly useful, highly reflective, and all that sort of stuff. It's in all the solar panels. It's in all the mobile phones. Um, so, so silver is part money, part just economic growth and industrialization. So I think that there are assets you need to own, but when there are like question marks hanging over the the shifting tide of global power, gold is a very international asset, and it is a safe haven and everyone ought to own it. How much is up to you, I suppose. People say 5 to 10% of the liquid net assets sounds about right. So it's not a huge proportion of your assets, but gold is always good to have somewhere.
And that will be classified as the defensive asset within your portfolio. Should I be putting it that way? Gold
Good,
and
good.
silver?
Yeah, that is it's generally considered a defensive asset. The main reason for
Yes.
that is it holds its value, but it doesn't generate any income. So
Oh.
there aren't that many, compelling reasons to own it all the time. But there are periods of time. I mentioned cycles before. There are periods within a cycle where gold is the most compelling asset. So for the last couple of years, it's been the best performing asset
Mm.
on the planet. Maybe after silver or even some years for Bitcoin, but gold has been one of the best performing assets. So it's hard to call an asset that's outperforming, say, the Nasdaq as a defensive asset, because sometimes it's just in its cycle. Right now, it's in its cycle.
Yeah, I think you're right. And that's because, like you mentioned, all these Trumpy reasons. So a lot more money is now flocking to it because like a lot of investors don't want that volatility in terms of their
Mm,
investment. So whenever there's a big international event of such, the tariffs, the geopolitical conflicts, the wars, we always seem to see that gold and silver's prices
yeah,
continue to spike for that specific reason. So it's having a great time, and it's at a record high, if I'm not mistaken, at the moment, and it still seems to be
close.
trending up at this point in time. So it's up to obviously it's up to our audiences to determine how much they should own in their portfolio, whether they should scale up a bit more in terms of buying a bit more gold, or they should be liquidating a little bit more and,
Yep.
and, and reallocating that. But certainly, I think having a small portion of gold, like you mentioned, 5 to 10% of your net assets in your portfolio, you
Yeah.
can't go wrong with that. And yeah, personally, in my opinion, it's more of a defensive type because, it just sits there. It's part of the inflation hedge that you have as well. And you know that that's always the last piece of gold. Sorry for the pun. Last piece
Yeah.
of gold that you can always rely on, even when the world crashes tomorrow, right? So, it's
Yeah.
always going to have its own value. So
You could have a little ounce in your pocket and you can go anywhere in the world and people would recognize that
people
as
recognize that.
valuable and as money. So it's a bit of it's a financial asset, but it's also like you're right, it's zombie apocalypse money as well.
Mm.
But it's been valuable for 5,000 years or since the earth was created. Don't question it. It is what it is. You know, can't go wrong owning it a little bit.
Can't go wrong. That's it. That's it. Cool. All right. Let's move on to Bitcoin then. I think
Yep.
pretty much a slightly completely opposite on the side of gold. Although, having said that, just before we jump on, we do think that there's somehow similarities between these two to a degree. Bitcoin has been regarded as like the digital gold in the last couple of years. I mean, people love it,
Mm,
some people hated it, some people absolutely don't want to touch it, right?
mm,
It was seen as highly speculative, but at the same time, for those people who believe that it was the digital gold, treat it as a bit more like a defensive asset to a certain degree. And I think the performance also proved that, in my opinion, because it attracts both speculative money as well as a small portion of defensive money, for those people who believes that, it is a slightly defensive asset, in that sense. So it is kind of getting best of both worlds to a degree. But John, what do you think? With the current Iran war ongoing at the moment, should investors looking at getting a bit of Bitcoin? Is it a good time to be getting into Bitcoin at the moment, given that it hasn't
Yeah.
moved much, or has crashed in the last couple of
Yeah.
years from memory? What do you think?
Yeah, so you mentioned some people love it, some people hate it, some people are somewhere in the middle. I'm kind of in the middle. I really
Mm,
like the metals, but I am a believer in Bitcoin though. All right, so Bitcoin had a big correction from Q4 last year, and it was tracking AI stocks. So AI has led to this big rethink of businesses, particularly software companies. It's like, do we even need software companies? Can AI just, replicate Salesforce within 30 seconds? And so there's a big rethinking of a lot of the services business, but particularly software. And AI has come back a bit. Bitcoin came down, and then after the Iran war, Bitcoin's gone up by $10,000. For it's around $70,000 now. My view is that Bitcoin 2026 is a good year to get into Bitcoin. I don't know if it'll do all that much this year. I actually think it won't do a great deal until the very end of the year. But I actually think if you believe in Bitcoin, and if you want to accumulate, I think 2026 is a great time to do that, because I actually think 2027 and 2028 will be the next big phases in the Bitcoin run. But I don't think 2026 will be the big phase in Bitcoin. So not really a Bitcoin guy. So I think you can discount what I say generally about this asset class. That's the caveat. I know more about other asset classes than I do about Bitcoin. Um, but I know that it has big corrections followed by, and it's almost algorithmic how the Bitcoin corrections worth. It's like 300 75 days of bear market, and then 1,200 days of bull market. If you look into it, it's quite programmatic. So I think Bitcoin bottoms this year, and it probably goes up over the next couple of years. So if you're a believer in Bitcoin, it is one of the other things that you should own in 2026.
Observations, what's causing it to be going up? Like under what circumstances or under what
Well,
situational circumstances would it be going up?
yeah. So it was going down because of this software story and the AI story,
Yeah.
and now it's
So the
boomed in
the
the
AI
last week.
bubble to a degree.
Correct. So it was getting caught up in that, but it's up for the last $10,000 over the last week because of the Iran war, and I think that's safe haven. I think that's safe haven. Um, a safe haven flight, which is interesting because it's such a volatile asset. But if
Mm.
you're a wealthy Iranian, and what you do is you put all your wealth on a USB stick and you get the hell out of there. And I think that there's an element of that when like people move en masse, Bitcoin actually benefits from that. When capital flees a place, it often Bitcoin is often the conduit that allows that transfer of wealth. So I think maybe it's something like that.
Yeah, that's why it's kind of been noted as the digital gold to a
Yes.
degree, isn't it? So
Yeah.
the performance kind of follows similar to a degree when there's a world event that's happening. Gold, silver, and to a degree, Bitcoin seems to be going up,
Yeah.
for that because the safe haven money's been parking or try to get into those
Mm,
safer assets, I should say. Bitcoin, I wouldn't classify Bitcoin as a safer asset, of course. But having said
no.
that,
Well,
like we mentioned before, some people do think that it is a defensive asset.
yeah.
Although, highly volatile, highly risky. Again, I don't think it's going to go to nothing, in the current market. So it definitely has its own value, or store wealth to a certain degree. Um, but again, I'm not, I guess for me as a very conservative, I thought you're more conservative than me, John, but you're sitting on the balance side. I'm actually sitting on the conservative side. I'm actually not going to
Yeah.
touch Bitcoin myself. I would rather park my
Right.
money into gold and silver, as opposed to Bitcoin. I guess because of that volatility that I'm seeing. If I'm really want to choosing an absolute defensive asset, I think, gold and silver obviously is the no-brainer. Now, putting aside the cyclical effect, because gold and silver has a really good run already, I think you're thinking about Bitcoin because it's currently at its relative low, isn't it?
Yes,
So if you want to cut
exactly.
in, so therefore you have more chances to make money out of Bitcoin in the next few years, as opposed to
Correct.
making more money from gold and silver in the next few years. That's the
Correct.
rationale behind it.
Yeah, look, I think that, and this is not advice, I think there's heaps of
Yeah,
upside for both of those assets over
yeah,
the next couple of years. I think gold and silver aren't done, but I also think that there's a cyclical bottom in Bitcoin,
yeah.
and I think that'll have a couple of good years. But these are, we're going through the assets that you should own in 2026, and in the case of Bitcoin, I think you should own it because of the years subsequent to 2026.
Mm,
Uh, Again, not
okay.
advice. Yep.
Setting yourself up for future
Yeah, I think it's,
potential
it's setting
growth,
yourself up.
basically.
Correct.
Yeah. Okay. And I know this is subjective, but like, would you have anything in mind in terms of how much Bitcoin you want to own in your total net asset? If it was
Uh,
you, let's just say, put it this way.
yeah. I mean, I actually think you should. I think what is not a bad idea is to have like a slow accumulation plan for Bitcoin, and
Hmm.
I think that it should be almost replacing your cash at some point in time. So it's very
Digital
liquid, right? It's
cash.
very easy. You can get your Bitcoin back in half a day, so it's very easy to get your money back. And so I have no recommendation on how much you should own. Some
Yeah.
people are maximalists. I'm not a maximalist, but it's just super liquid. So a proportion.
Okay. Up to the individuals. All right. Thank you. Let's chat about real estate then. One of our
Yeah,
favorites that we talk about, properties and real estate. So we both own real estate in Australia, and we definitely look at it as a defensive asset as such in our portfolio, and it makes sense because at the end of the day, as in addition to an asset, it's shelter. Simple as that. It's shelter. People needs it at the end of the day, right? Everyone needs somewhere to live. Everyone needs a roof over their head at the end of the day. So, whilst it's acting as a shelter, it's also acting as a bit of an asset in that in by itself. So especially and in a lot of changing world order, in like in the Iran war. In circumstances like this, I think a lot of international money will be looking at real estate in Australia because it's been seen as a safe haven in general.
totally. Yep.
So, I actually think that real estate in Australia is going to benefit from international money when the world has a bit of when there are international events that's ongoing, especially wars like the one that we're experiencing through at the moment.
Yeah.
Yeah, because they just want to be able to diversify and put the money somewhere into that they know it's going to be solid and steady, and it's going to continue to perform
Yeah.
in the long run.
I totally agree. I think that partly, and we've seen just the last couple of days, the
Mm.
city property prices are like creeping up ever so slowly, and there's certainly it's not like a windfall, but Sydney, Australian real estate is a flight to safety.
Yep.
It's a safe legal system, but there are not going to be any nukes here, and no, there's no war on our soil, and all those kind of boring things. It's just like a safe haven, some dirt in Australia. So when we talk about productive assets, you want to own in 2026 something that spins off an income. But I think that anything that you own will at least preserve its capital.
Yep.
Um, I mean, I'm always a fan of capital city assets, so I think that remains true. Um, I also think you want to kind of target older properties. I think that, you still want to be, I think, a bit defensive in 2026. So I think boring is beautiful. And I think that the most unloved, and it's starting to emerge as like where the clever money is going, but red brick apartments, old red brick, old blonde brick apartments. I mean, people say what's better? Houses are always better, land is always better. But there are moments in time when something becomes so cheap and therefore so safe because you're covering your downside. And right now, red brick walk-ups, blonde brick walk-ups from the 70s, sort of, tick a lot of boxes. They give you yield, and you want that when rates are rising. Um, but the downside is covered because there's no more depreciation of those buildings. So right now they're a lovely asset to own. But if you're going to hold it for 30 years, yes, try to buy a house. Okay.
Mhm.
But real estate's very safe in Australia, and I think that's what is going to prevail. There's going to be this flight to safety over the next month, and then we'll see how long this conflict lasts. That's the other thing. I think it will be a very quick conflict. Um, yeah, we'll
Bob
come to.
said it's about over in about 4 weeks' time, right? That's when the military action is going to be over, but who knows?
I think that's what the military action will look like. Then you never know. After that, there could be like a civil war or something like that. This thing could have legs, and if that sort of stuff doesn't happen, then markets will resettle at new levels. I think the oil
Yep.
will come down. So I actually, oil is not on our list of four things to own this year because I think that um, once the conflict is over, I think we're seeing peak oil at the moment. I think that the oil prices will come down.
Mm.
And the Americans and Israelis are being very careful to target military but not economic assets.
Mm, mm.
So I kind of feel like oil will come down after this is done, but you kind of never know. There are a lot of unintended consequences in wars, so we'll have to see.
That's true. Okay. All right. Yeah. So that's the main reason why oil wasn't kind of on the list to
Yeah,
chat about for that specific reason. Also, I think the whole world's pushing for renewable energy as well. So try to move away from fossil fuels and that kind of thing. So if you're talking about a long-term hold type of asset, that's why I think oil's gonna it's gonna slowly devalue itself over time is the way I look
right.
at it. Being replaced by renewable energy takes a long time. It will still have its own uses, that's for sure. So it's not going to go away in a short period of time.
Yeah.
But if you're talking about if we compare that to like a 20, 30 year old, sorry, 20 to 30-year hold pattern for property, well, I'll probably choose property over oil in that case.
Yeah. Well, you generate income. I mean, I'm not a huge believer in the renewable story.
Okay.
Um, I would like to believe it though. And it will play a role. But I think for in my lifetime, oil will be you know,
Mm,
oil will be, black gold and the economic lifeblood of the economy. So, unfortunately, I suppose.
some faith in terms of the future, John.
I
The
believe in the
pessimist is
future, but
coming
yeah.
out. The robots are going to take over the world in 2030, John.
Yeah,
Did
that's
you hear
true.
about that?
They
That's the latest goss.
they need energy too, though.
The power, well, what's going to cause? Well, basically, they're going to need a lot of power, right, in order to be
Yeah,
able to build these, and they're going to need a lot of power to be able to run AI. So,
yeah,
what's going to be leading to the future is you need power. So, that's an interesting one. How
yeah.
do you generate power efficiently is going to be the key to the future wealth.
I think nuclear is going to be. I think nuclear is going to be the stealth energy source for
Mm.
the big economies. I think they're going to quietly go back to it.
Digress. So
We
that'll be
digress. I
topic for
digress.
that'll be
Yeah,
topic for another
yeah,
day.
yeah, yeah.
Cool.
So
All right.
that's
So yeah.
three.
So
That's
we
three of the
talk
four,
about
right?
specifically residential property here, by the way.
Yeah, we
Do
are talking about
you
resi. Yeah.
do you want to touch on, or do you want to touch on different type of agriculture, farming lands,
So
as
the
opposed to
the other
maybe
asset that is
commercial?
always the other asset that real estate asset that is very that performs very well during these sorts of periods is
Mm,
farmland. Um,
mm,
I mean, I don't own any. I would love it if I did, but I don't. But farmland is the other sort of productive asset that is useful.
mm,
Farmland, it's been a good asset, but farming has been a bad business over the last couple of decades. So,
mm,
um, yeah, I don't know much about farmland other than it is in some respects the ultimate safe haven. You can go to spend time on your farmland with your gold during the zombie apocalypse. But I would be quite happy to get my 5% yield from a capital city asset and just assume that things get back to normal at some stage.
You talk about farmland as in like land banking to a degree.
Yeah, yeah.
Yeah.
I know people have done that, and they're playing a very long game,
Yep.
based on sprawling capital cities.
Yes.
Um, but it also ties into things like food supply,
Yep.
water supply, and so
Yep.
people who take a long view on food and water supplies tend to get into farmland as well. But it's a very cheap way to own a lot of dirt.
A lot of dirt. Yeah.
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 You just need to make
That's
it
for
cash
sure.
flow. Otherwise, you might as well own a smaller block of land in a capital city, which has been my strategy that I'm happy with. But farmland, it's performed well during periods of uncertainty.
As long as you can make the cash flow work, I think that's the main
If
thing.
you,
Because running a
correct,
farming business in Australia is challenging, in
correct.
particular with
Yeah,
weather events everywhere.
yeah.
So, okay. Do you want to touch on commercial property at all, John? What do you think, briefly?
So,
Or
uh, I mean, I'm a big believer in commercial property, but you want to avoid office space. I think office space is
yeah,
going to continue to be problematic. I mean, AI is looming, and this is going to have a big transformative effect. And I think that if AI goes the way it potentially could go, there will be things like rental subsidies and universal basic income, I suppose. But I don't think they would ever subsidize a commercial lease. I think that they would subsidize people's shelter. So I think subsidies might flow into resi,
yes.
and whether that's a direct rental subsidy or via like welfare or Centrelink or pensions or something like that. But no one who owns a commercial property is going to get some restitution. So my only concern, even with good commercial property, is I just don't think there's going to be subsidies if shit hits the fan. Whereas I think with residential property, governments will intervene to make people whole. So
Because that's a basic necessity for
yeah,
resi as
correct.
opposed to commercial. Commercial are for businesses, there to make money, to generate income, and that's purely up to their ability to be able to make that work,
Correct.
basically.
Correct.
Yeah.
Yeah. I mean, I love commercial real estate, but AI is looming over everything at the moment. So
Yeah, true, true. Okay. So be careful about getting into commercial property in
yeah,
2026, I think
yeah.
is your main message.
Correct. I like strip shops. I like warehouses. Um, that's kind of
Medical,
yeah.
medical
Medical.
centers,
Yeah,
medical
that's yeah,
centers. Yep,
yeah.
yep. Okay. Cool. Okay. No. All right. So I think that's pretty much covers the real estate piece. And last but not least, let's talk about index funds, which is also one of your favorites as well, John. So index funds, what I mean basically is broadly speaking, share market index funds, the ones that you see on, for example, S&P 500, ASX 200, a mixture of variety of companies across the best performing within that share market. Let's put it that way. So to a degree, this is diversified, and that's why. You should always have a piece of it as well in your portfolio because it does play a piece in the fact that it hedges against inflation to a certain degree. It produces an income through dividend. Hopefully, well, most of the time, I think it should. Assuming the businesses are performing quite well, it just comes down to how much you're getting. So there is cash flow component in there as well. And most importantly, I think the way to look at it is it's a defensive asset. I mean, very, very, very personal opinion. It is a defensive asset. Some people may argue it's an offensive asset, but for me, when you have a combination of all these companies, and we're talking about specifically like S&P 500 or SX 200, when you have all these variety of companies that's all within
Yeah,
one index fund, there's guarantee there's going to be company that's going to be doing very well. There's guarantee company that's not going to be doing very well. So, they will even each other
yeah,
out, which means you will probably get on par return, but you're not going to get extraordinary returns as such. And that's my definition of being a defensive asset. Like it is still going to be trotting along quite nicely. So your money is always going to be making more money and you're going to become wealthier, but don't expect it's going to be exponentially wealthier in a short
yeah,
period of time. I think that's probably the way I look at
yeah,
it. How does it
yeah.
impact?
That's right.
Yeah, John,
It's
sorry, you go.
no, no. I cut you. I was going to say even the bad assets within the index drop out of the index. So what you tend to
Yep.
get is all the assets are growing and the turkeys just drop out of the index. So
Mm,
that the bad companies eventually don't even appear in the index at all. So you do
of
get you
course.
do get growth, but of course this is partly just the inflation game as well.
Yep. Yep.
Yeah, I think it's like probably the cornerstone. I mean, most people, the Wall Street always talk about 60-40, 60% stocks, 40%, well, they usually say bonds, but we can maybe say the 40% should be your real estate, your gold, and your Bitcoin. but
Combination of those, yeah.
but some sort of an index fund which has got low fees, that's generating high single digit capital growth every year, plus the dividend that you mentioned as well.
Yep.
Um, Boring is beautiful. I mean, you don't need to overthink that. If AI leads to this boom, you'll benefit from this. If AI is terrible and it's oil stocks, you'll benefit from that. So it is just sort of this massive basket that is just gets swept up in inflation and growth. And if it owns a an asset that's a dog, that'll actually just drop out, and you'll get that gentle growth. Should be the cornerstone of your portfolio.
Well, I think it's more of a defensive asset to that degree. But
Yeah.
yeah, anyway, it's up to everyone to think what their definition of that is at the
Yes.
end of the day. Although you should definitely own a piece of it or a certain asset allocation. Would you suggest like 60% of your portfolio should consist of that,
Look,
or does it?
I don't have any view on that. That is the Wall Street view. The
That's
Wall
a Wall
Street
Street
view
view
is you should own 60% of your wealth in stocks and 40% in
and other.
bonds, they say, but something that's capital preserving and income
Mm.
generating.
Mm.
Yeah, so something boring, and then the 60% in stocks.
Standard stocks.
Yeah.
Okay, well there you go. So like you mentioned, I think the key, well, I think the key message takeaway is boring is beautiful. That's probably what it
Well,
should be.
yeah. I mean, so if we recap, so we're saying gold and silver. These are the four assets you must own in 2026: gold and silver, Bitcoin,
Yes.
real estate, income
Yes.
generating real estate,
Yes.
and the S&P 500 index. So, like, they're not even very volatile, like with the exception of Bitcoin, where there is some capital risk.
Hmm.
Maybe the S&P 500, although that's a basket so big, there's not a lot of capital at risk.
I don't think
There's
so.
three out of four of those would be defensive, and then you can put
Defensive.
a little asterisk and a question mark against the S&P 500, which is stocks. So yeah, it's mainly a defensive. What we're talking about are mainly defensive assets and inflation hedges. If I were to summarize, they all
Yeah.
seem to be inflation hedges. They've also, with the exception of Bitcoin, they're assets that have been around for a long time. A
Yeah.
long time. These are assets with a long history of not necessarily growth, but definitely capital preservation. So, we live in interesting times, and we're lucky to live in interesting times. But there is a war. Markets are affected by these sorts of things, and here we are in Australia, and probably the safest place you could be. Um, and so, no excuse for us not to be clever
Mm.
about these global events, and hopefully, yes, make some money out of that.
True. True. Well summarized, John. Thank you very much. I think that pretty much is a wrap for the four assets that you should be looking at owning in 2026. If you haven't owned any of those, obviously have a think about that. And again, what we talk about today is not advice. Okay, so it's basically just us having a bit of a chat in terms of what we think. Please do your own due diligence and seek professional advice before proceeding. As always, love to have you on. John, thank you very much to have
Thank
you.
you.
And to our audiences, have a great week. Keep an eye out on in terms of the Iran war situation because the next few weeks will be quite interesting in terms of how these assets move. But in terms of what we discussed today, I don't think you can go wrong with any of those assets, that's for sure. So definitely look into it if you haven't owned any of those. And we will speak to you guys again in another episode of Spark Your Fire. Cheers, John and David.